Welcome, I'm Ibrahim Sani and you are watching Market Talk. Welcome to the show. The year of 2017 has had many surprises. From January, we saw the inauguration of President Trump to the very recent Alabama shocker. This has comprised many of market watchers to actually factor in various risks and various factors, but some of them have transpired and come true, many others have not. So here joining me today as a recap for the entire 2017 market outlook is Stephen Innes, the Head of Trading for Asia Pacific of OENDA. Stephen, welcome to the show.
Thanks for having me on, Abraham.
Now, of course, we have had this discussion for many times, many years as well, and this has been a very promising year for many of the market watchers. But precisely and predominantly, your area would be on the foreign exchange and forex movements. Let's give a good recap into how some of the key currencies are doing and will do for the early parts of next year.
Yeah, it's been more of the side of two coins, really. We entered 2017 really bullish on the U.S. dollar because the anticipation was for Trump infrastructure spend to hit the market, and the notion behind that is it would add a huge element of inflation into the U.S. market, and it would bring the path of U.S. interest rates normalization higher and quicker. However, as the political malaise started to, develop in Washington, it became obvious to a lot of us observers that nothing's going to come easy to this current administration, not only from the bipartisan issues that they have within Congress and Senate, but also within their own parties. And I think this is really what caught us all off guard. We had assumed a lot of these fiscal policies would be rubber stamped. And
yeah, this is odd, right? Because the Republican, the GOP does have a majority in the Senate, albeit reduced quite substantially because of this recent win. They do have a majority in the House of Congress. One would assume that many of the policies and legislation would be able to go through both houses of Congress quite easily. Why do you think there was a major hiccup in terms of getting the meaningful legislation out and rubber stamped?
Well, it's basically the fiscal hawks, the Tea Party element that's still within the Republican Party. But the element of the Tea Party was what brought Donald Trump to the election. Mm-hmm. So they have that side of the party has to be listened to. They're not a majority; they're a minority. But when the votes are that close in the Senate, when you're running a 52-48 differential, it doesn't take a lot of swing. Mm-hmm. And obviously, because of the political animosity that's developing between the Republicans and the Democrats, there's not a chance that you're going to have a Democrat vote coming across the floor. So that's part and parcel, and the basic reason why I think they've had so many problems trying to get policy through.
As market watchers try to, unpack Trump, I think they have had a good idea of how he will behave for the remainder 3 years of him being in the White House, assuming he stays around for that long. And my conversation with the Malaysian Minister of International Trade and Industry last week, we were trying to have an understanding or a label to be put across to Donald Trump. I was basically asking the minister, do you see Donald Trump as a protectionist kind of president? Do you see him being very closed door, very domestic driven? He says that the argument can be made on the opposite side, because if we were to look at him trying to promote U.S. industries, trying to promote businesses, external businesses to try and strike a deal with Americans, wouldn't this show that he's actually trying to engage more bilateral ties? He's not being protectionist, he's trying to just engage more with the public world. And that kind of comment coming in from the minister sort of like drew an interesting angle or perspective into how I would view Donald Trump's policies. As a commentator in the markets, do you think that this would be the situation with Donald Trump, where he's actually trying to engage more bilateral ties from the international community with the American businesses? I
think there's two aspects that I view Donald Trump. I think obviously it's America first, and I think that's the primary focus. He's always going to put America in the best position when it comes to negotiations. But we have to think Donald Trump's a businessman. So he always thinks from a businessman's perspective, and whether that means creating relationships with industries in other countries or abroad to the advantage of the domestic economy, well, he's certainly going to do that. And I think this is what people must misunderstand about him. They think it's all America, America, America. But he actually tries to promote America outside of the U.S. also. I think one of the fears that people had relating to the protectionist issue was he was going after specific countries where he thought had a specific advantage when it came to the currency. Obviously, it was a fool's errand trying to blame China as a currency manipulator, because we all knew that didn't make any sense, because the currency was going the other way. But going after Germany, for instance, who's been in a really strong position because of the euro, relative to where the Deutschmark would actually be, is so undervalued, and that makes their goods, for instance, BMW automobiles, that much cheaper when they go into the U.S. market. So he's looking for these pockets of competitive advantages that other countries had, and this is what he was really trying to address. He wasn't trying to address an across-the-board protectionist policy. He was going after the specific areas where he felt, or his administration felt, that the U.S. was losing an advantage on.
The August House of the White House, and of course the very revered position of the presidency of the United States, is something that you do not put training wheels on. You have to know what you're doing, then you ask for that job from the people. He went the other way around. He has no clue on how to manage the administration, and clearly there are plenty of training wheels that has been placed in his first year in office. Has this taken a hit in terms of the American standing overseas?
Oh, 100%. One would have assumed that he would have immersed himself not only in political decorum when he's traveling overseas, but also surrounded himself by political heavyweights. And what I mean by political heavyweights are strong backroom negotiators that would be able to negotiate with the other side of the floor. However, he went the other way. He went out to the extreme right-wing side of it and bringing in, White House representatives like Steve Bannon. And I think this was the first sign where we noticed that there was going to be trouble, in the sense that they didn't have the savvy, smooth backroom operators. And this was the first clue that I keyed on where they're going to have a lot of problems, because we know when it comes to political negotiation, all of it's done in the backrooms. And without those political heavyweights and those backroom operators, policy is very difficult to get forward.
In your report very recently, you were saying that there's nothing to be seen from the Obama shocker, the Alabama shocker, other than the fact that it's going to be dollar negative. How dollar negative do you expect this to go down? Will it just drop, just bottom out?
No, I don't think it's going to fall off a cliff. What I was trying to imply there, it's going to create political headwinds. When we're trying to look at the forward value of the U.S. dollar and where, of course, the Federal Reserve Board interest rates are, obviously one thing is inflation. So we're looking for any keys that could actually stimulate inflation. The tax reform isn't going to do it. We were very, very negative about the overall economic impact from tax reform. We thought it was an isolated pocket to specific sectors within the stock markets that would benefit, and not necessarily transfer over into a stronger U.S. dollar, because there'd be no impetus for the Federal Reserve Board to increase interest rates. However, we were keen mostly on this infrastructure spend, and I think this is the key behind the inflationary bump, which we were calling the Trump trade back in January last year, and this is the thing that we thought would be coming to the surface again. But now, with the Alabama, shocker, that puts the Senate in a precarious position right now. It's a paper-thin margin, and especially with the fiscal hawks that are pretty much non-aligned with Trump's view on infrastructure, which would basically mean running the deficit up higher. That means that may not happen in 2018. And therefore, the whole thing about the U.S. path to, or the Fed's path to interest rate normalization, we're probably looking more for a lower for longer narrative. And we saw that play out in the FOMC last night, where they're sticking to their dot plot of 3. Some market commentators are looking at 4, but really the foreign exchange market's only pricing in 2. So we're still, behind the mark there. There could still be a little bit dollar positivity, but realistically, I think it's going to be a struggle for the dollar to make any substantial gains as we move forward into 2018.
All right, Stephen, we'll take a short breather. When we come back, we'll discuss a little bit more about the Asia-Pacific region. Don't go anywhere. Welcome back to Market Talk. I'm your host Ibrahim Sani. Today we take a look into a whole full year review of 2017. Joining me is my good friend and an old-time market commentator of ours, Stephen Innes, Head of Trading of Asia Pacific at Owenda. We've discussed quite at length about the global markets, particularly the US policies and domestic current issues there. Let's tie them back to what's happening currently in this part of the world. Precisely, I want to talk about the ringgit. We saw earlier in the year the ringgit actually dropped to low levels to 4.4, 4.5 at one point, and currently has been strengthening to 4.08 last time I counted. And this is indeed the highest that we've ever been for the past 15 months. Against the Sing dollar, we are the highest in the past 13 months. This is by no means a level that we should be getting accustomed to, but indeed it is something that we have to get used to over the past few years now. Could you comment on the direction of the ringgit, particularly on where it's going to head next?
Yeah, it's been a great year for the ringgit, no question. Looking at it, we'll start looking over 2017 when we entered such negative terms that actually entering the year we had Bank Negara quashing the NDF markets. They were worried about the rampant speculation that was occurring on the ringgit, and they felt that it was just getting unjustly hammered. And probably a good move because of the political malaise that was hanging over to 1 MDB, and also oil prices that were tanking, and being the only oil exporting nation in the region, it's certainly going to weigh on fiscal, matching the balance sheet. So, it was really looking like it was going to be the local whipping boy going into 2018, but things started to turn around. Domestic economy started to pick up. The external sector started to pick up amazingly, where it was really picking up a lot of steam on the global growth narrative. So you saw the exports in Malaysia start to accelerate quite well. And people started to look around and say, hey, something's really changing here. Then we had the announcement from the One Belt out of China, and Malaysia would be a big beneficiary out of China's fiscal spending, and the market started to say, well, this looks quite interesting. And then it just turned into the economic data just completely in the region was just doing fantastic. Now, the ringgit was so far behind its regional peers, like for instance the Korean won, that was picking up all the waves of capital inflows from foreign investors. But people started knocking on the Malaysian ringgit store and saying, this thing is under-owned, this thing is way undervalued, and they started to see opportunities, especially as energy prices started to firm up again, thanks to OPEC. There was a lot of the constituents on the Bursa that were quite undervalued, and we started to see some real appeal for that. But I think it's a regional narrative as opposed to an isolated narrative. What happened, in my view, is the Malaysian ringgit was so far behind its regional peers that it's really played catch up. But not only has it played catch up now, it's gone ahead. It's stepped ahead of its regional peers. So I think it's been a very, very positive year.
The World Bank late last week has readjusted the growth rate for Malaysia for this year to 5.8%, the highest growth forecast since 2014. Previously, the World Bank says that the growth rate for this country would be around 5.2%. That was around October this year. So as we head towards the end of the year, there is a consensus that we will be hitting the high fives in terms of the growth rate. How do you think this will translate into the relations that we have with the trade that we have with our neighbors, particularly in the Southeast Asian region?
Well, I think it's a good region right now, and I think especially trade into China is actually very solid. So obviously, as provided the China economy doesn't collapse, although they're going through some reform pains right now, this is to be expected because they want to stem a lot of these financial irregularities that are happening up there. They're trying to bring the market, tame the market down a little bit, try to take the fear of the asset bubble out. So those markets are going through some short-term pain, but I think ultimately for long-term gain. And I see Malaysian relationship with China improving, and I think as time goes on, this is where they're going to really benefit and pick up a lot of the steam.
What about the other Southeast Asian currencies, particularly markets where we saw some tremendous growth, in particular Vietnam as well as Indonesia? How do you think the local currencies will fare against other currencies for next year?
Well, I think it's a wealth story in the poor regions. Like people are getting wealthier. They're able to buy goods that they weren't able to buy before. So their economies are starting to pick up just from the consumption phase alone. And one of the big things that I see happening here is the kids picking up on technology, where the kids are really embracing technology. Like if you go to China or you go to any of the surrounding regions, everybody's got their mobile phone. Everybody's an expert on using mobile technology. And this is going to pay dividends because they're getting really keen on the base levels of technology. And I think as they go through their educational process, I think this is where the benefits are going to happen down the road. Maybe I'm looking a little bit too far down the road here, but I think this is what I'm looking at. I think it's the core level where things are picking up. They've certainly got the raw materials to export, but now they're saying, well, we're not only an exporter of raw materials, or manufacturing goods, but we're actually going to start picking up on the technology side.
What about the regulations that might or might not be put in place, considering that technology is a fast-moving animal? We know that regulations can slow things down. Do you think that central banks, for instance, may impose some sort of financial restrictions, any other blockages that might stop this fast-paced growth of the e-commerce business? Of how people consume the technology and try to boost trade?
I think from a fair practice perspective and a security perspective, they're going to be very cognizant. So I think that's the biggest thing, because obviously the advent of technology can bring out a lot of fraudsters. But we're looking at this new blockchain technology that's actually coming into play right now. One of the fascinating aspects is the Malaysian government's embracing it. Singapore government's embracing it. Local governments are embracing it. These governments locally are the front runners in this technology because they see the value. They see not only a value for industry, but they're also seeing value in it for consumers. So while I think they're going to be slow moving, and I think it'll be tightly regulated to make sure that keeping the fraudster element out of the game, I think they're embracing it. And I think this is a positivity for the region going forward.
And of course, we can also discuss a little bit about the ports. Currently, we saw a slight decline in terms of port activities, not just in the country, but elsewhere in the region. How do you think that this trade is boosting up, exports boosting up, at the same time port, the transactional activities, the EU numbers are actually going down quarter on quarter? How do you make sense of this?
Well, it seems to be as oil prices go, it tends to dictate how the pace of the play of the ports are going in the region. So everybody seems to have a smile on their face as oil. WTI is approaching 60 and Brent's trading above 60. So provided, I think OPEC keeps a firm bottom on oil price, I think port activity is going to still remain very strong in the region.
All right, we'll take a short break, but when we come back, we'll discuss a little bit about cryptocurrencies and see what Stephen has to say. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. I'm here with Stephen Innes, the head of trading at Asia Pacific Owenda. Stephen, we've discussed from the domestic ongoings in America to the current ties that we have right now in Southeast Asia. But of course, the one thing that has dominated the conversation amongst market watchers would be on Bitcoin. In fact, it's one of the top 10 words that Google has said that is globally trending. I want to trigger this particular price of Bitcoin. As you can see here, it has gone from nothing to 19,000 at the last count. I don't know what the price is today, but it's suffice to say that Bitcoin price is spiraling out of control right now. What do you make of this?
Well, it's obviously it's at a ramp. I think there's a lot of money sitting on the sidelines waiting for the futures markets to open, given the fact that that would offer a sense of credibility and integrity to the overall market, and on the anticipation that there would be more institutional, professional participants in the market that would hold the market together.
And of course, when the Bitcoin futures actually was launched, there were a lot of positive reviews in terms of the investors, or punters, if I would like to call them, Do you think that this is a good thing, or is there really a bubble of Bitcoin going to happen right now?
Well, I mean, my issue with Bitcoin is there's just not a decent correlation out there that we can actually connect it to any other underlying asset, which makes it very, very difficult to make reference to the price movements, any more so than trying to dictate the movements of a raging tornado. I mean, it's just that crazy, and this is the issue. I think ultimately what's going to happen as we move into 2018 is that the bigger institutions are going to start coming on board. Right now there's a code freeze pretty much in December, so the futures got rushed in pretty quickly from the CME and the CBOE. But it takes a little bit time for the banks to get involved in this. Not only do they have to ramp up the technology adequately to pass this through to their customers, but also risk managers have to have a look at it. And right now, risk managers are having a really difficult time trying to quantify it. So yeah, maybe the big clearers will eventually offer it to a high-end clients, okay, as passing through, as working as agency. But the troublesome part I have here is I don't think they're going to consider this an asset class that they're actually going to sell to their investment clients.
The thing is, it's not just concentrated towards the high net worth clients. We've got school kids right now trading Bitcoin like nobody's business. And considering that you're based in Singapore, which is a rather mature financial market, do you think that regulators in Singapore, for instance, might want to do something about regulating this particular price or futures, at least, of Bitcoin?
I don't think they're going to regulate Bitcoin per se, but I think they'll regulate the margins that are in play in Bitcoin.
Yeah, of course.
So I think this is where the people can get into trouble, is that, personally, I don't think it should be even marginable at this stage right now, because it's just a great unknown. People, even with any level of margin, this is where amateur investors or small retail investors can get into trouble.
Of course.
But, getting back to the point about school kids, it is the region, it's the Asian region that's actually responsible for the latest wave of Bitcoin craze. The waves coming out of Korea are just phenomenal. Waves in Japan, and even waves are starting to pick up in this area. So it's right now we just have to look at it as a ramp, but we have to be very cognizant about where the movements are going to go. Personally, I need to understand it a little bit more before I can actually have any logical comments on it.
That's the thing, right? People are still unpacking this whole notion of Bitcoin. Traditional commentators are trying to better understand whether or not this can be treated like a currency, like many other currencies out there. So the question now would be on how would the safe haven currencies like the yen, like the Swiss franc, how do they come into play with these kind of things? Do you think that investors are now going to move from one asset class to this new cryptocurrency business or deal?
Well, I don't think so initially, but my fear is right now is that with the ramped up moves in this, and reading in the press that people are actually putting on what they refer to as the mortgage arbitrage. They're actually mortgaging their house to invest into Bitcoins. This is where the worrisome aspect comes out. And this is actually a huge destabilizing point. A colleague was asking me about this, and I said, it's certainly not going to be a mortgage-backed meltdown. But I'll tell you right now, if a lot of people start doing this could create some housing sector problems as we move forward. I think the banks are going to get wind of this and probably cut this short anyway. But this is how crazy things are getting out in this world right now with regards to Bitcoin, and I think it's probably time for some of these people to come up for air and just have a look around and just realize what kind of risks they're taking on here. Because the bottom of this market could fall out anytime. I guess we just don't know how much support's on the downside.
Absolutely. We don't have much time left. I just want to have a quick grasp of the assessment that you have with some of the regulators that we have in this country. I want to bring it back to domestic. The governor of Bank Negara has been in office 1 full year. From your point of view, how has he been handling the central bank currently, and how does this tie, say, for instance, with other regulators like the SC, for instance?
I think he's done a great job. I think he's actually leveled out the volatility in the RMB, in the ringgit, and this is one of the keys. I think stability in the currency was front and foremost in his view, and he did a great job of that. Once the stability was there, we started looking at investors coming back in. Now he's got a bit of a tough task ahead of him because he's got a raging economy ahead of him. But he's not sitting idle. He's sending the signals out that he's actually going to be adjusting monetary policy. So I look at this on two angles right now. Adjusting the monetary policy by bumping interest rates up slightly.
Yeah.
You know, they're still going to be, real rates are still going to be below zero, but he's just bringing interest rates up incrementally. That'll improve the ringgit. Now, the benefit of having that stronger ringgit is that'll counter any of the inflationary aspects that may hit the economy because of higher oil prices. So pretty good getting ahead of inflation. And you're looking at these little positives that's coming out of the bank, and they're actually, you know, one of the forerunners in monetary policy in the region. And I think they're going to be the forerunner of monetary policy in 2018, getting back to the ringgit. And this is one of the appeals that people have on the ringgit.
Final questions for you include the elections. Right now, Malaysia can't run away from a 2018 election. We are expecting investor surprises in how ready are they to face the elections?
Well, you know, the elections are always difficult to really factor in. But I think it would be a real shocker if there was a change at the leadership in Malaysia. I think the market's pretty much pricing as a status quo. I think there's enough good elements coming out of the economy to support the government right now, and I think it's going to be a status quo. So I'm not looking for any great upheaval.
All right, that's great. Nice having a chat with you. Merry Christmas and Happy New Year, Stephen. That was Stephen Innes, the head of trading at APAC Owenda. That wraps up this episode of Market Talk. I'm pretty sure that you can enjoy this conversation. Follow this particular interview on your Facebook, Twitter, and Instagram. You can also listen to this interview on your podcast. Just simply search for Market Talk wherever you find your podcast at 501 Awani. Download our app on the Google Play and the Apple App Store. I'm Ibrahim Sani. Thanks for watching, and goodbye.